Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education at Charles Schwab, and this is Advanced Charting Techniques. And today we're going to be exploring an indicator that has kind of an interesting premise. Get this. It actually uses the overnight changes, the enthusiasm by the overnight traders, as a trend to gauge entry and exit signals for normal or standard hours trading. Should be an interesting discussion. I think this is going to be a new indicator for just about everybody watching. It was only added to the Thinkorswim platform about 6 or 7 months ago, and as far as I can see, I'm the only one that's ever done a demonstration on this. I thought it was about time to circle back to this one again. So I am definitely looking forward to this discussion. Before we can get to that indicator, though, let me first of all say hello to everybody. By the way, did I say the name of the indicator? Gap Momentum is the indicator, but hello to everybody joining us out there in YouTube. I see Dude32 and David, Selva, Derek, Scott, Robert, George, Chris B, Ocean Life, AJ, Michael, Jay Richardson, everybody else. Thanks for joining us week after week. We always appreciate your attendance and your contributions in these discussions. If you're here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the fact, enjoy the presentation, but be aware that you're invited to join us in the live discussions on Fridays. This webcast series kicks off promptly 1 Eastern time. If you'd like to join us on a live stream, we'd love to have you here. I also want to let you know that my very good friend Barb Armstrong is hanging out in the chats. Barb's going to be addressing any questions that I can't get to just during the flow of the presentation. And Barb and I would like to issue an invitation to you. If you have an account with X, give us a follow on that platform. It doesn't cost anything, and it's the best place to connect with your favorite presenters in between these live streams. So you can find Barb on X at Barb Armstrong CS. You can find me there at Cameron May CS. All right. But let's get into this. Let's talk about this gap momentum indicator. First thing that we need to do, of course, though, is to consider the risks associated with trading and investing. Risks are real, so bear these important disclosures in mind. The information here is for general informational purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Schwab does not recommend the use of technical analysis as a sole means of investment research. Investing involves risks, including the loss of principal, and any investment decision you make in your self-directed account is solely your responsibility. Okay, so with that accomplished, let's set an agenda for today's discussion. First thing that we're going to do is take a quick peek at the trades that we already have going on in our portfolio. Interestingly, those have been pared down by circumstance to just one position. We have 2 that closed out this week. I want to revisit those 2, look at the current position. Then we're going to take a peek at the markets to see what sort of market conditions we're dealing with. S&P is down about 8%. Is there any hope for the bulls? Let's look at that through a technical lens. And then we're going to be planning and placing a new trade using the gap momentum tool. So go ahead, chat in to me. Let me know, are you familiar? Are you among the, I think, relatively few, the small number of traders who might be familiar with this tool known as gap momentum? Really been available on a platform for 6 months, only been around for about 9 years. So just let me know. But let's go to the Thinkorswim desktop software platform. Here's our ABBV position. Ocean Life says you're not familiar with it. Art says, nope, never heard of it. It's an interesting premise. I'll explain how the whole thing's built, then we'll talk about how it might be used to plan and place a trade, and we're going to do that today. But we have 25 shares of ABV. Purchased those shares at 202.67, trading right now at 214.10. Let's go revisit the logic of our ABV position. So if we come up here to our studies, we can load the study set that we used to build this trade. Just a couple of weeks ago, we were introduced to something called the ribbon study. And what we noticed was that RS1, the fastest ribbon, had started to rise and it had crossed above RS2, the next fastest ribbon. And for some, that can generate a signal. So we took that signal right here with the plan that if those 2 cross again in the future, we'll take our profits if profits are still there. But right now, trade's doing fine. So if you need to go back and revisit any of these previous webcasts, if you don't know what these indicators are, I would strongly recommend that you subscribe to our Trader Talks channel. You can go down and click on the subscribe button if you haven't done it already, right down below the video. But our Trader Talks YouTube channel is where we house our playlists of previous webcasts and also our live streams, you can join those right here. So if I click on our playlists, if you want to find those for this webcast series, my webcast series is about halfway down through our list of playlists. So I'm just going to zip right down halfway. There it is, Advanced Charting Techniques. I can click on View Full Playlist. And for example, this ribbon study discussion is right there. All right, but back to our ABBV trade. No action to be taken at this point. We'll just let it continue to run. And actually, that's nice to see. The way the markets have been behaving, the way that some of these trades have cooperated has been pleasant to observe. Let's have a look at our next trade. This is one that closed out this week. We had a position on Apple. Now with this, we weren't using the ribbon study, so let's go up to our study sets. Let's load up our Apple study set, which was a 200 period simple moving average combined with the money flow index. And what we had noted when we took this trade back here, bought the shares at 222.33, the stock price had just come down, settled just above our 200 period simple moving average, and was starting to rise. And around that same time, we also saw a fairly rare occurrence where our money flow index dipped down below 20, reached potentially an extreme oversold condition, and was starting to show strength as that index was rising back up above 20. So we took our entry right here, and we had an initial stop right down below our moving average, that down there at 214. So stock started to cooperate, and as it was rising, we had a later discussion where we decided, hey, let's cancel that original stop, move it up here to 233.14, just below this more recent area of previous resistance, new support. And look what happened to us just about 48 hours ago. A long-tailed candle whooped us out of that trade, and off the stock is going again. That's a risk anytime we use a tighter stop. We don't have as much tolerance for downside, and we got sold out. So in that case, we made what, about $11, a little bit short of $11, so that's okay. Now, finally, we had a position in CL. This was last week's trade. It's already done. Now with this one, we used a different study set again. And again, I had a question that came up a couple of weeks ago, fair question. Somebody asked, why do we use different indicators to plan all these trades? Well, it's not my job to just grab a couple of indicators and declare these the best indicators on Wall Street and use those from week to week to week. Instead, what we do is we experiment with different tools. We get introduced to them. I explain how they work, and then we plan and place trades using those. And that allows my audience to weigh for themselves which tools might best be suited for their portfolios if they're going to use any technical tools at all for the trading. But my job is just education. So that's what I do from week to week. We learn something new. If we take a math class, we learn an algorithm, and we move on to another one the next week. Yeah, that's what we do here in our technical trading webcasts. But with this one, let's come up to our studies. Let's load up the study set that we discussed for our Colgate-Palmolive, which was a weighted close moving average combined with Thinkorswim's proprietary market forecast tool. And with this, we noted that we had just gotten a weighted close crossover, and price was just above that weighted close moving average. We also saw that our two fastest market forecast oscillators had dipped down below 20 at the same time, indicating potentially a short-term price low. We combined those two technical bits of evidence into an entry signal, and we took that entry and we had a target up here at previous highs. And look where we touched just today. So last week's trade is done, it's concluded. We did have a stop right down there. That stop's now been canceled and our target achieved, trade's done. So that's great. So those are our existing positions. Let's go have a look at what's going on with the markets. Here's the S&P 500. Our trades have done okay, those three at least. The markets are not doing so well. Let's clean up our chart view here. And as a matter of fact, I'm going to switch this up for the study sets. The one place that I do introduce a consistent study set is looking through the same lens at the markets. Doesn't mean it's the only lens that we can use to peer at the markets. It's just what we're using for this series. So I'm going to go to my study sets, let it load up the study set for our TVM strategy. What is TVM? That's my abbreviation for trend, value, and momentum. So we have three indicators. We have a combination of moving averages to indicate trend. We have the RSI to indicate potential short-term value, and the MACD histogram to indicate potential short-term momentum. So what's going on with this 8% retracement in the S&P 500? Does this mean that the S&P has started into what's going to ultimately turn out to be a long-term downtrend? Time will tell on that point. But looking at it through the lens of using these two triangular moving averages, a shorter one and a longer term one, the 50 and the 100, well, as long as our 50 is above the 100, our technical trader using this approach might still conclude that the trend is still intact. Shorter term trends are still persisting above longer term trends. So trend might still be bullish with this window of selling off within it. Now, to some, that might actually represent potential opportunity. It might mean lower risk than what we've seen recently. Yeah, there was a 9% retracement back here in July, exactly, Ocean Life. As a matter of fact, I made a post about that just recently on X. So if you're not following me on X, you might want to do that. Where, yeah, let's just scroll down right there. There's that 9% retracement. This is actually the fourth time where we've seen a retracement of at least 5% over the last 12 months. So yeah, if you're not following me on X, there's my handle right there at Cameron May CS. Definitely, if you would, follow your favorite presenters there. But what's going on with this retracement? Some might still be looking, if they really are still bullish on the S&P 500, they might be looking for, well, where's that short-term turning point? How might that be generated? Well, one potential way to see that is using this indication of short-term possible value using the RSI. The RSI has actually gotten down below 40, which has only happened, this is the fifth time in the last 12 months. And you can see the last 4 times, that was a pretty good signal that we were at a short-term low. This was a pretty good signal that we were at a short-term low from that July sell-off. This one, not too bad. It was more like the S&P went primarily sideways and then up. There was a little bit right there, little dip below, identifying this low. But we've been chopping down here around 40, just below 40 for a while here. So trend, some might still conclude bullish. Value may be present. Now what we might be looking for is to get, oh my goodness, it literally happened as I was talking about. Watch this bar. What the trader might be looking for here is for a red bar to transition to a darker red bar. And if you need to go back, you can rewatch that on the archive. This flashed darker red for just a moment because those last 2 histogram bars are just about identical in depth. There it is. We'll see if it closes out that way but at this moment, this thing seems to be hearing me and saying, let's cooperate with Cameron, let's throw him a bone. But in any case, maybe this is the time to be looking for bullish trades according to those that use this approach to analyzing the S&P 500. So with that as a backdrop, let's go set up a bullish trade using this gap momentum tool that it seems like just about nobody's heard of. Let me go back through. Yeah, not here, new to me. Nope, never heard of it. Nope, no, never heard of it. New to me. Okay, not a single person. Interesting. Okay, so let's learn this. And so for today's example chart, let's clean off our charts. Let's go up here to studies and just remove all the current studies. And then I'm going to go to Walmart. And let's load up this tool. It's known as the Gap Momentum Tool, created 2015 by Perry J. Kaufman. I'm going to click on the little flask icon. Let's type in Gap for Gap Momentum, choose it from the menu, add that. And as I go to apply it to our chart, make a quick note of these two numbers, 120. So Kyle, are you asking, is this like a MACD histogram? The one that I was using on TVM was the MACD histogram. This indicator, nothing like the MACD histogram, but I'm going to click apply and click OK. So with the gap momentum indicator, it consists of two lines. And really what this is doing is it's using overnight trading, gaps up and gaps down, as a general gauge of what may happen on an index or on a stock over a longer period. So we have our green line, this is known as the gap momentum line, and then we have this sort of salmon colored pink line that's called the signal line. So let's talk about the construction of the green line first. Actually, before I do that, I'll also note over here to the right, people commonly ask me, what do these numbers over to the right mean? And is there the highest point they can go to and the lowest point they can go to? With some indicators, they're what we call range bound. Maybe sometimes they can't go above 100 or below 0, for example. This is not a range bound indicator. Those numbers, they're basically relative. I would suspect that most of the traders that use this indicator don't even pay any attention to the numbers where they are on the scale. But just know that this is not a range-bound indicator. But our gap momentum line, the green line, looks at, well, let's talk about these numbers here for just a moment. The 100 is used in the construction of this green line. It looks back over the last 100 days and then takes what happened with the price of the stock from the close of one day to the open of the next, the gap, and assigns that a positive or a negative value. Did the stock go up overnight or did it go down overnight? And then we just calculate also how far the gap was. And then we tally up all of the positive gaps, tally up all the negative gaps, including their total values, and then establish a ratio of those values. So for example, let's say that over the last 100 days, there were 60 up gaps, and on average, they were $2 up, okay? So 60 times 2 would be 120. That would be the upside gap value. And let's say on the 40 down gap days, they averaged 1, okay? So a gap down of 1, then we just, that would be a negative value of 40, but if we just assign it a positive value, in any case, just a ratio of those two total values that generates this gap momentum line. So it's the changing of those ratios over time that's expressed as this green line. So let me see. Brown Buffalo, you're saying I never over communicate. Good. I like to go into detail with these things. Some people say it's too much. Other people say, Cameron, quit treating us with kid gloves. We don't need to know this kind of stuff. Anyway, you know me. This is the way that I do things. So I'm glad you appreciate this. But what do you suppose? I'm going to throw this out as a question to those who watch these webcasts frequently. What is the 20 here then? What would you guess it is? If the 100 is a 100-day basically record of the gaps up and down and a ratio of those two, what do you think the 20 is? If you just thought or answered, I would guess it's probably a moving average of that ratio. You're exactly right. It's a 20-day simple moving average of that ratio. We just look at the ratio line value over 20 days and assign that a value. So over the last 20 days, the average value for our ratio was 179.93. Yeah, it's a smoothing, Ram. Exactly right. It's intended to smooth this out. And for some traders, they only use that pink or that salmon line. That is their signal line. So now that we generally understand the construction, and if you need to go back and rewatch the archives for this, if you really want to sort of process what I just stated, you can do that. Think it through, hit the pause button, sort of think about what I've discussed, that's okay. But for right now, let's clean this chart up, because if traders only use that pink line, and some do, not all, we'll come back to the green line in just a moment, but we can actually come up here to our Flask icon, click on the little gear, and if we're not going to use the green, we can take it off the chart by unchecking the box that says Show Plot. The plot is the indicator, in this case the line, and this is just saying we don't want to show it on the chart. So I'm going to click OK and click Apply, and we've essentially just erased that green line. So let's talk about how Perry J. Kaufman thought this smooth version of the momentum displayed by overnight gaps might be used to generate buy and sell signals. And he has something that he calls his gap M line entry and gap M line exit. A gap M line entry is whenever our pink line is going down and then it changes direction, that's a signal. So I'm going to quickly eyeball just the bullish ones. It looks like we have a change of direction on Walmart for the gap M right there. The gap momentum, that's what the gap M stands for. We're going up and up and up. We sort of accelerate here. Here would be sort of the end of a bullish trade using this indicator. And then if we're waiting for the next one, it looks like we might be going down. This is definitely an indicator that can start to channel. It can go very sideways for a while. George says, Cam, does this have a volume component since before and after hours are typically very, very low volume? George, no, it does not. So that's a very, very good question. No, volume does not play a role in the construction of this indicator at all. It is purely price gaps from close to open the next day. By the way, as I mentioned, so here's our change in our indicator. According to Perry Kaufman, the entry would be the next day at the open. So if we see the indicator tick up, we wait until we're sure the indicator is going to finish a whole day higher than it was the day before, and then enter the next day. Okay, so that would be somewhere around here, I think. I'm eyeballing. I'm going to draw some ovals on here, and then you're going to see how this is. Anyway, you'll see what I'm going to do with this in just a moment. Looks like, so this is our gap M line entry. Looks like there was a possible gap M line exit right around here. Looks like we had a few, I would guess, if we were to really, let's zoom in on this, because we're going to split some hairs here for just a moment. That looked like a flat line. This is a good illustration of how this can, when a stock starts to kind of go sideways, it can generate quite a few whipsaws. And I'll propose a potential solution for that in just a moment that some traders will apply in an effort to try to smooth out these whipsaws. But yeah, it looks like there was another possible entry right here. Do you see that? Where our gap M line was going down, it started going up again. There's an exit right about there. Another probable entry right about here. I'm having to squint a bit, just like you are. But we start going up. Here we start heading down again. And here we start heading up again. So yeah, this is an indicator that can start to generate fairly rapid signals. That's very common with oscillating indicators like this. When a stock really starts to go sideways, that's where they start to break down in their value. But in any case, let's zoom back out. We can now see there was a series of signals through there. You can't even see my ovals. They were too small. Anyway, but looks like there's another one right around here with an exit right around here. And then I'll bet there were a whole bunch more whipsaws right through there. Make a little, lose a little. Make a little, lose a little. This is the typical outcome on those. David says, will you see this on a 1 day, 1 minute? Just like with most of the technical techniques that I teach in this webcast series, yes, traders can typically just whole hog take this to a different time frame without any real modifications. But I just have to say, regardless of the time frame, there's not a guarantee of performance on any individual trade. Whether we're using an hourly chart or a daily chart or a weekly chart, but I will typically illustrate this on a daily chart. And in this case, that was what it was specifically constructed for originally. Anyway, but I'll bet there's a mess of entry and exit signals right through there. But I wanted to show you this. Here's a nifty little tool that some of you may not be familiar with when you're learning a new strategy, if it generates specific signals like this. Well, if we go up to our Flask icon, right next to the Studies tab is the Strategies tab. And actually, the Strategies tab will apply entry and exit signals to a chart through traditional interpretations of the indicators. I'll use this one as our example. Let's add the gap momentum system to our chart under the strategies. Now this, I didn't have to go and create this. It's just already in the menu. We just have to click on strategies first and then choose it from the menu in alphabetical order. Let's add that to our chart and click apply and click OK. And what you notice here is that it is applying green arrows and pink arrows for gap M entries and gap M exits. And look where this one was applied. Yep, there was an entry right there, and there was an exit right there. Now it applies it, it shows us right where the reversal has happened. So that one's a little bit more precise than my sort of eyeballed ovals that I drew. If I zoom in on this little cluster right there, yep, there are my little tiny ovals down there at the bottom. Gap M line entry, gap M line exit. Notice it abbreviates those to gap M LX for exit, LE for entry. Art says it might be hard to catch these signals in real time on a very short-term time frame. That may be the case, Art, but on a daily chart, it's not difficult at all because we identify them one day, wait till the close, make sure they're still there, and then according to Perry Kaufman's trading system, we would enter the next morning. All right, so there's our entries and our exits. So trading bullishly here, what the trader might look for is these bullish upturns in our line, bullish or bearish downturn in the line might signal the end of our trade. And when we apply this strategy tool, it also shows us whether these hypothetical historical trades were profitable or unprofitable. It'll show a pink line when they're unprofitable. It'll show us a blue line when they're profitable. So if you see this long dashed blue line here, that means from entry signal to exit signal, that would have been historically a profitable trade if executed according to this approach. There were definitely some through here. Let's go back here, zoom in on this. You can see here's one, didn't work out. Right there, lasted a couple of days, trade was over unsuccessfully. So that's definitely a possibility with this system. Now, Leon, you like that? Is that a cool tool? And Jay Richardson likes that? Well, let's try to address this issue of all of these whipsaws. Whipsaws are a common issue with a fast signal in a period of consolidation. So what some people try to do to reduce the number of false signals is actually slow down the signal itself. Now, with just about any technical indicator, how do we slow that indicator down? If we want fewer signals, hopefully of higher value or quality, and that's certainly not a guarantee. Just by slowing something down doesn't mean that it's inherently going to be better. Sometimes slower means that we were behind the curve as the stock is already moving in the right direction. Sometimes it means that we're behind the curve as the stock is starting to peel back and maybe we should have already taken profits. But Isaiah says, can you run a report to see the PL for this? Not that I'm aware of. You could probably build a script for that. I'm not the best at scripting Ocean Life. But what could be done relatively quickly is bring this up as a strategy and then just look at a series of charts, particularly maybe the one the trader has been interested in trading the most frequently anyway, the symbols that a trader is already trading, see if it works for those symbols. But in any case, yeah, let's slow down this indicator. And just about with any indicator, to slow it down, we use larger numbers in the construction of the indicator, longer time frames. So I'm going to come up here and let's change this. I'm going to right click on this and change this to a 50 period moving average. So we're going to smooth out our smoothing element even a little bit smoother, basically. We're going to use a longer term moving average. Click OK here. And at the same time, let's come here and make sure that our study matches that. Let's change our study signal length to 50. Click OK. Let's click Apply and click OK again. And immediately, I think you can see the impact. See how there are far fewer entry and exit signals. Hopefully, we've improved the quality, but what we've definitely done is slowed it down. What that means is it's going to be less prone to get us into early, maybe a little bit more prone to get us out a little bit too late. Okay? But yeah, that's one customization that some might make. So let's bring the gap momentum line back into the discussion, because for some traders that also plays a role. So I'm going to come back up here. Let's get that green line back in here. I'm going to go to my gap momentum tool. Let's check that box for show plot again. It's going to put our green line back on the chart. Click OK and click Apply. And let's talk about another possible entry signal and exit signal that can be generated by the gap M tool. And that is when our gap momentum line crosses over the signal line. So yes, for these, much like other moving averages, crossovers can potentially generate signals. You know, with a moving average, sometimes we'll use a price bar crossing over as a signal. Sometimes we'll use another moving average as a signal. But what the trader might be looking for here is when our gap momentum line, the ratio of positive gaps and negative gaps, if it slips below the smoothed out version of that ratio, so if our green line is below our pink line, and then it starts to rise above, what that means is that ratio might be changing rapidly. Our slowed down trend line might not be fast enough to react to that. That could be the signal. We got a signal for that right here. For this, we wouldn't necessarily use this. I'm going to leave the gap momentum why am I losing my line of thought right here? Anyway, I'm going to leave the strategy up here. Oh, and by the way, before I go on with that, I want to point out there is a survey in the chat for the benefit of the live stream audience. So let me hit the pause button for just a moment on the discussion and ask you to do me a favor. For those that are here in the live stream, if you would click that survey link right now, it'll have it ready for you to fill out after the webcast is over. Just do me a favor and fill out that survey. I'll promise you, if you take the time to fill out that survey, which is only 2 multiple choice questions, then a comments box and a suggestion box, I read through your data, I read through the comments, and it definitely helps. All right, so thank you for doing that for me, always appreciated. But back to our chart, let's talk about if we're getting in on a bullish crossover of the green rising above the pink, of the gap momentum rising above our signal line, where do you think we might get out? Yep, when the opposite occurs. That would be considered a bearish crossover. So this one might have generated an entry signal right here and an exit signal right about there. Another entry signal right here and another exit signal right there. And actually, since here, there has not been a bullish crossover on Walmart. So, Richard, I don't know exactly what your question there means. Is the Schwab working now to trade Walmart? Not quite sure what you might be asking there. If you want to clarify a little bit, I'd be happy to try to help. But let's bring up an example stock now to place a trade. We need something that's actually generating a recent signal. And with some significant searching, because when the markets are just going down, 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 guess what most of these lines are doing as well? They're going down as well. Yep. The ratio of downward gaps is probably accelerating ahead of the number of downward gaps is probably accelerating ahead of the number of upside gaps. It just makes sense. So how significant might it be if there's actually a stock out there that over the last 100 days, we're seeing the opposite occurring? Well, there's some stocks out there like that, one of which is Amgen. So here's what's going on with Amgen. One thing we'll note is that it's been having a pretty rough go on price for some time, but starting to strengthen more recently. That has allowed that ratio of upside gaps to stabilize and maybe start to increase ever so slightly. And what we also just saw just recently, let me zoom in here, still getting a little bit of choppiness here. We've seen a couple of entry signals, one that didn't work out so well, another one that worked out okay, and then we just received a third one. We also received a crossover of our green gap momentum line above our pink signal line. Now, that crossover kind of caught my eye because you can see that crossovers can also have their own whipsaws, up and back, up and back. So for some traders, a filter that they apply to that crossover system is to wait to see, does the green line stay above the pink for at least 3 or 4 days? And this is actually the 4th day where our gap momentum line is holding its position above that pink line. So we have a crossover. We also have just a gap M entry where the smoothed out line, our pink line, has just started an uptick. Let me show you how you can really sort of nitpick this one. So this was heading down and down and down. It generated an uptick right there. I want you to keep your eye on this number right over here in pink, the pink number. What we want to see is as that's going down, it's just telling us the pink line is going down, the numbers are decreasing. But even if we can't see the line go up, because maybe the change is too subtle, the numbers will reflect that. So let's go back here to where I have a line here. And what you'll notice is on, what day was that? That was March 3rd. Our gap momentum value is 117.10. As I move forward to March 7th, that gap momentum line is 117.15. Almost can't see it on the chart, but we can see it in the numbers. That is an entry signal. So we have just a gap M line entry. We also have our crossover, and that crossover is now confirmed. We're going to be taking a trade here on this with the plan that if we get the gap M line turning down again, if we get that gap M line exit, that's when we'll exit. So let's go buy some shares of Amgen. So we've been keeping our expenditures under $5,000 on this. We're not actually going to be able to buy a whole bunch of shares, 327 shares, $327 a share. Let's see how many we can afford. Get out our calculator. $5,000 divided by 327, 15 shares. So we're going to go to our trade tab, click on the ask price. Let's buy 15 shares of Amgen. I'm actually just going to submit this as a market order. Obviously, there are risks in submitting a market order. We just wind up paying whatever price the market requires when our order gets to the front of the line. But I'm going to click confirm and send, buying 15 shares of Amgen at the market price. It's going to be about $5,000. With market orders, prices can change quickly in fast market conditions, resulting in execution prices that can be different from the quotes displayed at order entry. So I'm going to send this off, and we own those shares, 327.43. So it actually did go up. It was at 327.14, I think, as I was entering that order. All right, well, price is moving in the right direction. We'll see if that continues. But guys, we have accomplished what we set out to do. This is a new indicator for a lot of you. Let me zoom out. Why not? Just so you can get one last view of what we're viewing here. But in any case, this is an introduction to this very interesting indicator that uses the overnight changes as a gauge for longer-term trends and longer-ish signals when trading stocks or other things. Art says, what is the SL on Amgen? Oh, the stop loss on Amgen? Well, stop can be placed. It's a good question. I'm not going to enter one here. We're just going to watch to see if our gap momentum line turns. There we go. Chet Styles says, what triggers a strategy to mark an entry position, and is this mark indicated at the close of the trading day? So Chet, you may need to go back and revisit this webcast. We talked about specifically when these entry signals are generated. That was probably 15 or 20 minutes ago, so you can go watch that. But in any case, guys, yeah, we've done it. We've talked about how the indicator is constructed. We've talked about how it might be used to plan and place a trade. We've planned and placed an example trade. We also got a follow-up on some existing positions, took a peek at the markets through that trend value momentum lens. That's a lot for a 40, 45-minute discussion, but I hope it was helpful to you. This is what we do on Fridays, and if you enjoy this kind of stuff, make sure that you're just putting it in your calendar to join me on Fridays, or at least to check out the archive after the fact, just on your schedule, because we do have these webcasts on demand as well. You can just go bring up the archives. So on that thought, make sure, if you haven't done it already, that you are subscribed to the Trader Talks Schwab Coaching Webcast YouTube channel. You can go down below the video right now, click on subscribe. It only takes a second. It doesn't cost anything, but YouTube is where we post all this stuff. You can find the playlist right here, and you can join the live streams right here. So do yourself a favor and subscribe to the channel. Just makes the navigation of YouTube finding our stuff much easier. Also, make sure that you're following Barb and me on X. X is the very best place to connect with us in between these live streams. So if you have an account there on X, go give us a follow. You can follow Barb there at Barb Armstrong CS. You can follow me on X at Cameron May CS. Thank you to everybody that's already filled out the survey. This is your final, I'll give you a final heads up. Go fill that survey out now. If you've enjoyed the session, that's fabulous. But honest feedback is always appreciated. Also, thank you to everybody that's already given a thumbs up. Okay, I can see 187 people watching. 74 people have already clicked the like button. That's always appreciated. It actually directly helps your presenter when you click that like button. It gives them a nice little virtual pat on the back, but it also boosts my webcast in the YouTube algorithm, helps more people find these discussions and learn about things like the gap momentum tool on Thinkorswim. So always make a habit, if you would, click the like button if you enjoyed a webcast and if you think it would benefit others to find it. All right, everybody, thanks. Go have a great Friday. Enjoy your weekend. I'll be looking for you in my other webcasts. Next week, I have something every day of the market week, so you can find me on the calendar there, teaching a range of topics. I'll also look for you on X, but whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.